Hi, this is Vishaib Shaukat from Grow Pakistan. In today's video, we'll be discussing March 2025 agricultural updates in Pakistan. This year, March coincided with the month of Ramadan. In March 2025, Pakistan advanced cautiously along a narrow corridor between macroeconomic stabilization and systemic fragility. While critical agreements with the IMF unlocked new financing, structural weaknesses in trade, energy, and governance persisted. This quick roundup breaks down the key developments and their broader implications. On March 25, Pakistan reached a staff-level agreement with the IMF. Under this deal, Pakistan will receive approximately $1 billion under its ongoing $7 million extended fund facility and an additional $1.3 billion through the Resilience and Sustainability Facility, which is aimed at bolstering climate adaptation and energy transition efforts. These agreements signal trust in Islamabad's fiscal reforms, which include revenue expansion, debt management, and rationalized subsidies. Pakistan's inflation notably declined to 1.5% in February, which was the lowest rate in over a decade. Remittance inflows surged 32.5% year-on-year, reaching $24 billion. And the current account posted a $691 million surplus over 8 months, a significant reversal from last year's $1.7 billion deficit. However, these gains remain highly contingent on sustained political will and the IMF board's final approval. Despite macro-level agreements, our domestic economy showed clear signs of distress. This was exemplified by sugar prices rising sharply, reaching 180 rupees per kg or more in urban areas. Although the government imposed a retail cap of 164 rupees per kg and set ex-mill prices 159 rupees per kg, the price ceiling had limited immediate effect. In the energy sector, early March saw a 0.5 rupees cut to petrol prices down to 255.63 per litre and a 6.5 rupees cut, a reduction to 247.82 in LPG. However, a subsequent 10 rupees levy hike mid-month reduced consumer relief. On the trade front, cotton arrivals fell by 34.2% to 5.5 million bales, threatening the entire country's textile value chain. Conversely, sugar exports doubled in January to 17.9 billion, and palm oil imports rose 53%, costing 96.1 billion, which reflects higher input dependency and commodity vulnerability. In financial markets, investor sentiment responded positively to the IMF developments, and the KSE index began March at approximately 113,000 points and is now teetering around 118,000 points, representing a nearly 5,000 point gain. Meanwhile, domestic gold prices surged to over 320,000 rupees per tola, while international benchmarks stabilized above $3,000 per ounce. This is driven by geopolitical uncertainty and inflation hedging. While these gains reflect short-term confidence, they are fragile. Market stability hinges on follow-through reforms and capital flow. Regionally, tensions along the Afghanistan and Pakistan border resurfaced. On March 3rd, a clash at the Torkham border crossing resulted in casualties and a full border closure. The crossing remained closed for 25 days, reopening only on March 28th after protracted tribal diplomacy and logistical strain on medical and trade routes. Internationally, efforts to de-escalate the Russia-Ukraine war materialized in a 30-day ceasefire agreement backed by diplomatic mediation in Saudi Arabia. Global wheat futures dropped due to this Black Sea truce agreement. Though symbolic, the agreement reduces short-term energy disruptions and aligns with global calls for negotiation. Overall, Pakistan's March 2025 trajectory underscores the dual nature of its recovery: macroeconomic stabilization juxtaposed with micro-level stresses. While external financing and IMF support provide fiscal breathing room, unresolved structural inefficiencies, from commodity insecurity to water stress, could undermine progress. In the coming months, attention will shift to tariff reform, fiscal discipline, and political continuity. Whether these agreements translate into durable change depends on Islamabad's ability to implement difficult decisions under rising domestic pressure. I'm your host Vishaib Shaukat, and continue watching Dawn News English for similar content.